I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Senor Nicolas Hodge, who's also an investor and the publisher of Daily Profit Cycle, among other hats the gentleman wears. This is the 290th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk gold. We're going to talk election takes. We're going to talk premium portfolio picks, and we have some news to share with you folks. But before we get to all of that, Mr. Hodge, how goes you this fine day, sir? Spooky times, Halloween right around the corner.
It might be news to me. I never know what's going on, I feel like, Gerardo. So I'm interested to see what the news is. I am doing well. Excited to get to New Orleans next month at the New Orleans Investment Conference. That'll be fun. We have links on the websites and then below here to show you how to join us there. Especially with gold near record prices, and that being historically a gold conference. So anyway, I'm doing really good. How are you?
I'm well. Healthy. The wife keeps getting prettier, and she loves me more every day. She's healthy, so the kids still love me, and they're healthy. No complaints here, sir. We got a market. We have a lot of markets, actually. Let's get to it. Let's get to the broader indices. Takes on where the Dow and the S&P and the NASDAQ are here going into the last 12 days before the election, right? And we'll talk election briefly here, betting odds, but what are your thoughts on the overall indices in the context of a dollar index that is stubbornly above the 104 level and potentially a rate cut here, another rate cut very, very soon, right?
Yeah, more of the same in a lot of ways. Stock market continues to be near record highs, maybe a slight pullback over the past week, but nothing to be too concerned about. Earnings season is now getting underway. That's sort of off to a decent start. I was reading about the earnings growth rate in the S&P with something like 20% of those 500 companies reporting, and it's healthy, it's something like 3.5%. That would be, I think, the fifth consecutive quarter of positive growth rate in the S&P companies. So you have companies and a stock market that is healthy. You have a NASDAQ that is looking healthy again. You have AI companies that continue to have earnings growth and continue to drive the market higher. And so there's a lot of awesomeness out there in the market. I was looking just at the S&P sectors earlier today, and I think there's only one that's down over the past month. So, 10 of 11 sectors of the S&P moving up, likely energy that was down. So maybe we can talk more about that later in the context of oil. But market seemingly healthy, disconnected maybe from the economy in many ways. And maybe we can talk about that later as well. But that seems to be nothing new either, right? So we talked about wealth inequality and K-shaped recovery, and that continues to go the way it goes. Gold hit a new high since you and I last spoke. Again? For all types of reasons. Again, a lot of awesomeness in gold. That may not be awesome for the other side of the equation. I read this week that, year-to-date gold ETF inflows are now positive. So a lot to like in the gold space. Silver has broken out to 12-year highs, $34.50 the ounce. So anyway, a lot to like out there in the markets, and then even crypto catching a bid, right? With Bitcoin up to $67,000 or so in the past week, and I don't know where else you want to go from there, but lots of awesomeness in the market at the individual household level. Maybe not as much optimism, still feeling the pinch of the inflation that never got all the way down, but that's sort of separate from the equity prices and the asset valuations.
Yeah, we definitely have to talk about the bond market, right? And before we move on to the bond market, you talked about the awesomeness. Look, even Tesla's up some 22% today, right? So you mentioned tech stocks and you mentioned gold. Let's segue a bit. I thought it was interesting that Newmont beat on earnings, gold sitting at $27.35, and the stock was down some 15% today, citing inflationary pressures and citing a bloating all-in sustaining costs. I think the all-in sustaining costs were something along the $17.50 level, with some of those assets not performing the way the company hoped for. So interesting to me that Newmont could be down 15% with gold at $27.35, and Tesla can soar 22% on Elon promising a cheaper, a more affordable Tesla model coming next year. So that coincides with a bottoming of the lithium price, which is now back, to its low levels that we saw in September of this year. So we've had some head fakes in the lithium spot price. It's clear to me that the growth is absolutely there in the lithium sector. Elon, basically said, look, we had projected a 14% increase in demand for our products. We now see that being closer to 25 to 30% for 2025 if Tesla isn't going to continue to take everybody's lunch and increase its market share in the EV space. The other EV companies and automakers looking to make a dent in that sector are going to have to react to that news, right? Coming out with the model that's a $15,000, $20,000 model versus, the higher end cars that can go for as much as six figures is absolutely a game changer at a time where battery cells are near an all-time low. So I see a lot to like in the lithium space. 2025, I still believe we're going to have a heck of a year in 2025. We got some tax loss selling going on right now with the lithium equities. That'll take another month and a half or so to play out. But back to gold, 27.35. How does gold look for you? Obviously, every time we talk, it seems like we got brand new record highs. Chart looks beautiful to me. Every time they try to push it below 2,700, it says, fuck you. Yet you got a bond market that, a 10-year treasury that just surpassed and kissed the 4.25% level. And this despite a 50 basis point cut from Jerome, with another one, at least 25 basis points coming here in the next 30 days or so. So thoughts there? What's the bond market telling us? Because it doesn't correlate that, the bonds and the dollar index is where it is while the Fed is cutting.
I mean, you should go and watch Mr. Druckenmiller's 20-minute interview on Bloomberg, which we mentioned the other day. He's much more thoughtful, insightful, and has managed much more capital through more cycles than you and I. But he's essentially taken the position, which I agree with, that, the Fed is off sides, right? They did what amounted to an emergency rate cut. We've talked about this, the largest single rate cut since sort of the 2008 global financial crisis, right? And you wonder why the cut has to be that big if there's all this awesomeness out there that we just talked about. But the awesomeness, as I said, and as I think you agree with, is concentrated in the equities and in the asset prices and valuations, and not in the households and the Main Street economy, right? And so what he was saying is that they jumped the gun. They didn't wait until their inflation target got all the way down, and then they can see that rising again. And so they're sort of trapped. He was saying they're sort of data dependent and instead of real world dependent. Is this, I think, similar to the phrasing that Druckenmiller was using? And yet, as I look it up here, it's 95% chance of a rate cut at the November meeting, right? And so the market is saying that they're wrong as well, right? Because you were just saying the 10-year yield has gone up now pretty fast, and the dollar's gone up with it, and gold has gone up with it, and the S&P has gone up with it. And so we've been saying on this podcast, and I've been writing about in the monthly letter, that the correlations have been all over the place. Normally the things that are inverse, i.e. Gold and rates or gold and the dollar, are now going up together. Specifically over the past month, all those things are up. Dollar up, 10-year bond yield up, gold price
overall
up,
indices up, gold price up.
Exactly right. And so, and at the same time, the mortgage rates are going up, right? The Fed cut 50 basis points in September, and the mortgage rates are back up to 30-year mortgage rates to 7%. And the housing numbers just came out at like a 14-year low or something like that, showing that, on the margin, the consumer's not able to afford these houses, not able to afford these payments, down payment, et cetera, whatever it is. So I think that's why one of the reasons gold is going up. And I think you'll see sort of a reinflation. We were talking about eggs a couple of weeks ago, remember? And I was saying that, people say it's because of the avian flu. And I actually tweeted that, the egg price chart. And someone responded, but that's because of the avian flu. And so, the other thing is the numbers aren't changing that much, right? Like I've been telling you, growth is okay, but it's just like 2.5%, 3.5%. Inflation is not at the target 2%, but it is like 2.5% or whatever. So we're just dancing around that soft landing, I guess, as it were, if you want to call it that. And that's why lots of people have been able to make lots of arguments. Yeah, we are in the soft landing, this, that, and the other thing, but I'm starting to get into word salad now. I think you get another cut. I think you get more highs in equities, and I think you get higher gold prices. Just to put a finer point on that, some things don't believe it. Like oil hasn't gone up despite utter fucking chaos in the Middle East, and copper has gone down over the past month as well. And those are sort of two major barometers of global economic health and future growth, right? And they're sort of saying,
I couldn't agree with you more. Have to touch on silver. Silver now finally trading like a commodity, no longer trading like an industrial metal. Although there is a good case to be made that industrial demand for silver over the next several years will be robust. I continue to remind viewers that silver has a lot of catching up to do to hit those $50 record highs that we got many, many years ago. I absolutely believe that $50 price will be taken out. When it happens, really isn't consequential. What is consequential is you folks should be positioning for that right now if you're not already positioned. I'm going to rant a little bit, but Nick and I run a private placement service for accredited investors, and I'm going to talk our own book. If you are an accredited investor with more than $10,000 in the market, you should absolutely be paying us the $3,000, $4,000, $5,000 that letter charges a year to have access to the deal flow that we provide. Why are private placements a great way to make a lot of money in a short amount of time when you have the kind of network that Nick and I are fortunate enough to have been able to carve out with the help of others over many, many, many years, going on 15, 16 years now? Because of the leverage that you get. I'll give you one example. QTWO Metals, we helped finance that and then offered it to subscribers, and many of you took advantage of that. We helped finance that, I think, 2 months ago at 25 cents, had a 50-cent warrant. That company hit a high of $1.38 today and has a 52-week high. It hit a couple of weeks ago at $1.48 per share. 25 cents to $1.50 is good work in a couple of months. And oh, by the way, you can go buy a whole other share at 50 cents for the next several years. So when you combine the ability to have deals that not very many people have access to, and then you add, the privilege of a warrant or a half warrant, and we're doing the work for you by vetting the deals, I couldn't be more excited about a market in gold, a market in silver, a market in uranium, a rebound in the lithium space that allows us the opportunity to position aggressively for the next cycle higher. I say all that to say that I think silver is going higher. It's going to make record highs. And we have what I think is going to be the single best silver deal on 2024 and 2025. The company has a tiny market cap of roughly $5 million. It's targeting 200 million ounces of silver equivalent ounces over the next year or two. It's underground, it's high grade, it's a past producing consolidated district that's never had the land package consolidated the way it does now. Permits are in hand. We're not waiting for permits in this case, and drilling should start in the next month and a half or two. That's a company that, again, and I wrote about it last week, it can go from 5 million to 100 million in a month or two, right? Because if you prove the concept and you prove the grades and you prove the continuity of the vein structures, and they've identified several zones of vein structures, well, if you're targeting 200 million silver equivalent ounces, you're not going to be a $5 or a $50 million company. Those companies that have that type of resource are commanding $300, $400, $500 million valuations. And in many cases, they're being taken out for damn near $1 billion. So when you can write a check, and again, we're offering this to subscribers, right? We've worked with management and have been lucky enough to get an allocation to offer it to subscribers. I am personally participating, as are many of the people in our group. When you can write a check at a $5 million valuation and have a clear path forward, and there's no guarantees in life, but we have the drill permits already, and we can see where the silver is. It's not rocket science. There's important gold and copper and base metal credits to go along with the silver that they've never even assayed for historically. So again, folks, I don't know how else to explain to you all that 5 million to 50 million to 100 million to 200 million to potentially $500 million valuations. It's good work if you can get it. And we're not talking about having to wait 10 years for this. We think if we have the kind of success we're anticipating with the drill bit, we think we see those types of valuations over the next 12 months, especially if silver continues to do what I think it's going to do. So long-winded way of saying we have one heck of a deal that will fill very, very fast. I'm writing an aggressive check. People in my group and our group are also writing aggressive checks. The bulk of it is spoken for already. We were lucky to carve out an allocation. If you call the company and you call the CEO and you ask to participate and you're not a part of our group, and we don't have you on our list, you're not going to participate, folks. The rest of us already have, a check amount written in mind, an allocation set aside. So do yourself a favor, people. Buy the service, then go put some money into that deal. Sit back and fingers crossed, no guarantees in life, but pretty damn confident this one's going to work out very, very well for us. Back to our regularly scheduled program. Mr. Hodge, any thoughts there?
I'm going to talk more about private placements just because you started, and then I'm going to go back and hopefully talk about gold as well, because we were talking about that in a second. But yeah, I wrote the report for this private placement, and it'll be out here by the time you see this podcast. Paying subscribers to Private Placement Intel will have seen it. So just a couple of additional highlights. Gerardo gave you a really good taste there, but earlier this month, Core Mining took out Silvercrest for $1.7 billion. And last month, First Majestic took out Gatos Silver for nearly $1 billion. This is US $970 million. And this is nearby that district, right? Chihuahua, as I like to say. You talked about the past producing. Never been drilled below the water table, past producing in the 1940s and 50s, but they only got down to the water table because they didn't have the technology to get that out. Likely that the vein runs, up below the water table and a long strike. Tiny, like you say, so a little bit on share structure. We like share structure. Let me scroll down there just to get a handle on that for you. It's very straightforward. So 19.3 million shares outstanding. I believe management owns something like a third or even a bit more than that, and other shares in strategic hands. And he knows where all the shares are. When I saw the cap table, it was one of the cleanest I'd ever seen. And so that's really shareholder friendly. When Gerardo talks about why the shares can go up so fast, it's because there's only 19 million of them out, and they're in very strong hands. No debt, no warrants, no options, right? And by the way, they also hold a royalty that is thought to have a fair market value of somewhere in the neighborhood of $500,000 to $1 million. So a lot to like just in this private deal. We've had a lot of success over the past, as Gerardo said, and then again, for accredited investors, people that can write checks, $10,000 checks or more. We have people that put $10,000 in every deal. We have people that put $50,000 in every deal. So just to give you a sense of the check size. And then again, on the benefits, right? In this case, you're getting a warrant, which allows you to buy more in the future. And we help you navigate through some of that, right? If you need a broker, we can point you in the right direction. And these are deals we put our friends in. Gerardo has a group of people that are now writing, checks into private deals. I have a couple of friends that participate in some deals. They're business owners in their day life, and they have a little bit of speculative capital, and they've done well, right? I was going through with my buddy the other day the deals he's done. He's like, he's in Bravo at 64 cents. Yeah, 50 cents US, 64 cents Canadian, right? He's in your Peruvian play, he's done well in that. He's in a couple of other ones that we've done well in as well. And so, he enjoys it, and he needs the coaching, right? Like, that's what I was going to say. He's, every day he's worried about, payables and receivables. He runs a liquor store, right? He's got employees. He's got a day-to-day. He has 3 young kids, right? He's not, he doesn't know what a legend is and what computer share is and what a DRS statement is, but 5 minutes on the phone with me, and I've been able to help navigate him through that and get the stuff done. And that's sort of the same thing we provide in private placement intel. I have in-depth reports up about, what are subscription documents? How do you get them taken care of? How can you sell? Like all this sort of stuff, right? And so if it's a thing where it's unfamiliarity that's keeping you from doing it, or, you have trepidation about how to actually get it done, we got you sort of covered there as well. And so Back to gold, you mentioned Newmont and why it was down. Well, we touch on themes in this podcast all the time that seemingly come to pass. It was only a week or two ago I was telling you about how I was looking at slide decks and the NPVs and the IRRs were going up, but the CapExes were staying the same, right? And that just wasn't reality. So that's what affected Newmont. You said that inflation was still present. And yeah, those costs are still going up, inflating their all-in sustained cost of production, compressing their margins a bit. And then the other thing is that trees just don't grow to the sky, right? So if you look at the charts of GDX and GDXJ, they're getting very close to like long-term breakouts, like 10-year type breakouts. And there's always volatility and, volatility around those levels on the chart, right? Support and resistance. And, I was looking at the GDXJ chart the other day and, if it breaks north, it's going to really break north. And so I think what you're seeing is just some technicals coming into play at the same time as these companies are reporting earnings, giving traders and investors reasons to bully stocks around, et cetera. But again, I think the overall direction is higher, and I think you continue to be in a buy the dip position for gold and gold stocks that we haven't been in for a long time. And so it feels weird. You wake up and you see Newmont down, whatever it was down, right? 8% or whatever. And that's a day to buy. That's a day to buy Newmont, right? So
Agreed. And look, one final, I'll put a bow on it and then I'll be quiet. But, we had a uranium deal that hasn't even closed yet, or just closed, actually. I just saw the news release a couple of minutes ago, but we offered that up 2 weeks ago. That's up 100% in 2 weeks. They haven't even done nothing. I wrote an article about it and recommended it because I think it's a heck of a speculation. I think it's a heck of a play. A similar tiny market cap, tiny valuation. Team is successful serially, especially in the uranium space, and they're in top-notch jurisdictions, right? All of the boxes that I like to check off when I'm writing speculative checks. So private placement intel, I encourage all of you, go to dailyprofitcycle.com/subscribe. Go to digestpublishing.com. You can see a list of our different services. You can get access to the rantings and ravings and thoughts, educated mostly of our talented editors and myself and Mr. Hodge. And tons of useful information in there, folks. I don't know how much more we can try to provide, both, paid services and free of charge, to try to get the word out that you absolutely are going to miss out on continuing record prices in the gold space, new highs in the silver space, new highs in the uranium space. That's firming up back to the $82 level on a spot basis, and lots of catalysts to come there. Copper will have its breakout moment in the not too distant future. And by the way, we happen to have the help of Jerome. We have a Fed behind us that's making it rain on all these motherfuckers for the next foreseeable future. Despite what the bond market says, the bond market doesn't like it. The Fed doesn't have a choice. If rates keep going up, he's going to have to get more aggressive to cut, for the simple fact that we have $35 trillion in debt and we can barely afford the interest on it, let alone all of the commitments that we have taken on over many, many, many presidencies, both Republican and Democratic. So with that, I'm going to segue to the election, Nick. Betting odds, what's that looking like now?
Trump got up to nearly 65% on the poly market over the past week. He's softened a bit. As we record this, I imagine he's at about 63% favorability to win, something like 2.5 billion on the line. That in of itself is interesting. That whole market, poly market, is run on a crypto called Polygon, right? That's a crypto that you can buy. And so I was doing a bit of reading about that, how that market worked, because I just wanted to get more familiar with it. And I know I can go to it and click and see what the percentage is, but I started reading like the white paper and, how the site actually works. You're pairing up 1-to-1 with somebody. And so when I say Trump is 62, you're paying 62 cents on the dollar that he's going to win, and the other person's paying 38 cents saying, no, he's not going to win. And then at the end of the day, it settles 1-to-1. You get that whole dollar. So if Trump wins and you paid 62 cents, you get, you paid 62 cents for a dollar. And if he loses and you paid whatever, 38, then you're paying 38 cents for a dollar. But it's 1-to-1 matched up, settled in a stable coin, USDC. So it's entirely a crypto phenomenon, which maybe I'm dense and I should have realized earlier, but I started reading about it, and that's interesting to me. You mentioned the the debt just now. I think we just went over, our payments are now over $1 trillion for the first time. I think I've read that this week.
Yep.
I also think I read that the deficit
In interest.
in interest. Yeah, the interest
folks.
payments.
Yeah.
I think I also read that the deficit is the highest it's been since 2008. And I haven't heard either candidate talk about that, right? I saw in the past week, I was, again, educating myself, looking at sort of the budget analyses of the different candidates. Trump is actually predicted to be fiscally worse than Kamala, because even though she
substantially fiscally worse,
even though she spends a ton more, he gives tax cuts, which obviously I'm in favor of, but then he doesn't make them up with the spending cuts, right? And so at the end of the day, his fiscal responsibility is worse, right? So it's just funny that, if you're a fiscal voter, like Trump shouldn't be your guy either. It's just the whole thing is fascinating to me. But anyway, he's at about 62%. Nothing meaningful has happened for me in the past week. Trump shook some fries at McDonald's. Nothing really else happened. Kamala did a town hall. I don't think the election is going to have, significant implications on the market. So not much else to add there. What else do you want to talk about with the election?
No. I think that's it. I was just curious on your take. You've been watching the betting odds on a pretty consistent basis. And so I was curious where that was and how that looked with, 12 days to go. I can tell you this. I went to, my local supermarket yesterday, and they're out voting early. I mean, the lines are long. The lines are long. It's going to be a good turnout this election cycle. So whoever your candidate is, if you have one, if you have one, I would encourage you to get out there, because they are definitely out there in bunches.
I think 12 or 15 million people have already voted. I am one of them. Washington State is a mail-in ballot state, and so we got our ballots last week, I think I told you, and mine has long been in. So people are already voting, and that's why I'm putting a little bit more credence in the betting market as well, right? It's like draw results. Somebody saw the core, right?
Yeah, for sure. Speaking of draw results, I mentioned lithium earlier, and it's if you've been in the lithium space the past 3 years, you've done really, really well overall, right? Patriot 16 cents, 17.50. But if you've been in the market for 1 year, and this is year one, then hang in there, folks. There's brighter days coming, and there's light at the end of the tunnel, and it's not attached to a train. I mean, if you were in Patriot the past year, you went from $17 to some stupid number like $3.50, I think is what it closed at today. Again, I continue to believe in management, continue the assets top notch, it's world class. The market cap's getting to stupid levels, but we're in the midst of tax loss selling season. And so what you're going to see is some people offsetting the gains that they've made in other sectors by selling some of the companies that have lost their money, hence forfeiting the tax that they would pay on some of those gains. And so we're going to see a little bit more of that. Heck of a speculation if you don't yet own Patriot Battery Metals on. And look, again, our group will hold the bulk of our shares. I've said since the beginning, you trim what you need to take care of your taxes and take care of your tuition bills and take care of your expenses and vacations. And the rest of it's going to be there till it's bought out or put into production. And either one of those two events, one of the two will happen, leads to a multi-billion-dollar valuation, not a $300-400 million valuation. So a lot of upside. Several of you have written in concerned. I know what I own. You should know what you own. You should know the value of that. And you should know that the value isn't reflected in today's share price. The other one that has done the opposite, one that, again, we offer to subscribers for 25 cents, the company I talked about earlier, QTWO Metals. Complete opposite, right? From 25 cents all the way to $1.38 today, waiting on assays from a hole that, could deliver over 300 meters of likely 1.5, 1.6% lithium with some high grade, as if that wasn't high grade enough, with some higher grade intervals in between. I suspect we get that over the next week and a half. I suspect that likely takes that stock closer to $2 than $1. Happy shareholder, excited to have had, a solid position in Q2. Continue to think that stock has a lot of room to run. What are you watching, Mr. Hodge, in the market? This is the part of the show this is the news that we had that I think, you're going to get 10 more episodes of this for free. And then we are going to be pivoting to putting this podcast behind a paywall. it'll be super affordable for everyone to be able to access it. But we do feel a responsibility to subscribers and paying subscribers to deliver it to them first. You will then have the opportunity to listen to the podcast a few days after we record it, with the exception of some of those premium picks is the way that you're thinking of structuring it, right, Nick?
That's it. A cup of coffee per episode, something like that, which is totally worth it because of the things that Gerardo just told you about Q2 metals and Patriot battery metals that some people pay thousands of dollars for to initially get the recommendation or the advice or the insight or whatever it is. Of course, we're not going to be giving you access to 15-cent private placements with full warrants on this podcast, but we are going to be talking about things that have value. Things like if I say, I've been watching Bravo Mining, which I've already mentioned this podcast for a long time, and it ran to over $5 and has pulled back to $2.40 because it was technically broken, as I've said a lot. And it technically fixed itself in the past week. As Gerardo, I slacked to you a chart this week, and the wick of the candle finally went down. It had gotten close, but it hadn't closed the gap, and so that's why it hadn't gone up, despite the amount of PGMs that it has, despite the new massive sulfide discovery that's a kilometer away, despite the fact that they continue to find higher grade PGMs and gold in trenching that hasn't even been drilled yet. So that has value there, right? Because you can go and buy value. You can go and buy Bravo at the bottom of the chart at 240,
Absolutely.
knowing that it's going to have results from those massive and semi-massive sulfide targets that are in the lab now, that we know assays are pending for, that we know we're in mineralization, right? That is something that paid readers already know. I've told them that. And then you would now know in the podcast that's actionable advice.
Yep.
And therefore it's valuable advice, and therefore you have to start paying for it. So that is what it is. Another one here is Pure Cycle. It's a good way for us to communicate too. Like, I had a subscriber write in the other day about Pure Cycle. That's a plastic recycling company that I had in Hodge Family Office last year and earlier this year that we've sold for a profit. And I guess you could argue was a bad sell because it's continued to go up. And the subscriber wrote in, he said, I didn't sell it. I still own it.
Nice.
Would you mind commenting on it? And this is a great venue to do that, right? Like, sure, I would still own Pure Cycle. I went and looked at their last sort of public update. They seem to be making ground on the throughput, have worked out the kinks of the startup of the facility. And I think there's lots of legislation that's going to be at their back, especially in California, that's going to, sort of mandate the recycling of this polypropylene. So again, that's information that's worth paying a cup of coffee for every episode. Again, it's a weekly podcast. So those are things that we're going to talk about. We'll give you insights into not just our portfolios, but the other portfolios as well. We have a tech publication called Digital Dispatch. They've been having great success with companies like Palantir. And we have a publication called Crypto Cycle, and crypto is starting to heat up as well. I was just talking about Polygon. I mentioned Bitcoin earlier was up around $67,000 dollars, and so we can give you insights on the crypto market and tell you things like, we're having a free trial right now. So if you were to navigate to Daily Profit Cycle and check out Chris Curl's last article, he's offering you the chance to take a free trial, check out all his tutorials, check out the portfolio, see what cryptos he's buying, and then if you don't like it, then it's a free trial, right? You don't have to continue renewing at the end of it. But anyway, we want to get you more engaged in the premium services that we have. We want to use this as a tool to tie them together, and we think it does give you a lot of value. So we think it's only fair that we charge for the value that we deliver. And we've been doing it for a long time, right? This is we're approaching the 300th episode, and that's when the free version of this. And then last thing I'd say is you'll still get a free version, right? The paid version will go behind a paywall, and then a free version of it will be published at a later date, either a day later or whatever it ends up being. So still working out some of those details, but I'm definitely angling towards that for 2025.
Good stuff. What are you watching in the markets, Mr. Hodge?
Gosh, I've got my eye on this election. I know that's not the market, and I said it doesn't weigh on the market all that much, but I think everyone's thoroughly caught up in the dog and pony show of it all. I've been watching crypto more and more. It's been a while since Bitcoin's got some love, since I allocated to it in a bigger way. And so it looks like it wants to go up. And then I guess just having written my weekly letter today, I'm watching the precious metals. I mean, those seem to be real exciting. We mentioned a record in gold and then silver breaking out. And then one thing that's on the list there that I haven't mentioned is PGMs. So they don't get a lot of love and talk on this podcast, but you'll see palladium's added almost $200 in the past month, from $900 and change to over $1,100. And that's right around the price of platinum as well. So they are precious, just like gold and silver, and they continue to move up. And oh, by the way, Bravo's got a lot of that stuff, if you didn't know.
Yeah, my brain is a little on the goofy side. So when you said PGMs, I immediately thought Ali Wong is one of my favorite comedians. And she just had a brand new Netflix special, which I highly encourage anyone with a sense of humor that isn't easily offended to go watch, right? It was absolutely fantastic. My wife and I thoroughly enjoyed it. But she talked about being a solid 6. And so when you mentioned PGMs are like the solid 6 of like the metals world, right? It's like gold is like a hot 7, 8. Silver at its best is like a hot 7, 8. Copper when it's ripping and roaring, a hot 7, 8. But PGMs are just always going to be a solid 6 no matter what happens, right? But a solid 6, and again, if you watch the comedy show, it'll be even funnier. But solid 6 will get you some places, man. So go PGMs. They've added quite a bit off the bottom here in the past month and a half. I think there's some leg room there, obviously. And yeah, Bravo, I couldn't agree with you more. What are we watching this week? You're watching the election. You're watching Bravo. You're watching PGMs. I'm definitely waiting for those assays from Q2. I think, there's holes left to report. I know those are trickling in. I can't wait to see what that, 300 plus meter intersect ends up coming back as. What else am I watching? Back to Lithium, right? Patriot. They haven't had news in it's getting close to a month and a half. And again, like I said last week, I continue to believe that there's probably something material behind the scenes that has forced the company into a quiet period, because outside of that, with 9 rigs turning and tons of assays and, conversations being had and negotiations being had for a number of different things, right? It's just mind-boggling to me that there wouldn't be any news unless they couldn't put out news because of a blackout period, which I, in that case, completely understand. But looking at the lithium sector, I'm seeing a lot of really good macro news in the lithium space on the demand side of things, and I'm seeing supply starting to come off and more aggressively, because suppliers can't continue producing at a loss and make it up on volume. But looking for that, I'm excited about our silver deal. A lot to like. That's what's on my list this week, folks.
Cool. You'll get more behind. You'll get more what we're watching when it's behind a paywall. What are you going to be for Halloween, Gerardo?
The Joker.
Nice.
And the wife will be Harley Quinn, of course. So we're looking forward to that. It should be a fun weekend. I'm excited for it. We'll definitely we'll share some pictures on the podcast once we get into costume. What do you have going on, sir?
Well, we have a party for the kids where I do a hayride. I'm not sure what all the kids are going to be. I think we've got a duck hunter, a witch, and Harry Potter. And I'm going to be a beekeeper, and the wife is going to be a bee.
Oh, I love that. That is well done. Got to see the pictures. Please share when you get them. That's all I got for this week. Anything else you want to get off your chest, Mr. Hodge?
No, that's it. Enjoy the week. Have yourself a happy birthday, Mr. Del Real. And we'll see you here next week.
Scorpio season, folks, the 29th of October. Thank you so much. Y'all be safe out there. Take care of yourselves. Take care of each other. Try to be nicer to yourself and try to be nicer to each other. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 290th episode of our weekly therapy session that we call Investing in Bizarro World. Take care out there, everybody. I hope everyone had a great, safe, fun Halloween. Take care.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.